Let's look at global markets because they have stabilised overnight. This is following the takeover of Credit Suisse by UBS. Join me now is our business reporter Edward Boyd. I didn't think we'd be talking so much about Swiss banks of late, but here we are. Markets seem to think the banking crisis is being contained, and that's just the point, isn't it? This had the potential to really spread right around the world.
It sure did, Laura. That was the big fear, that the collapse of one bank in America led to the collapse of Credit Suisse in Switzerland, and then that could just be a series of dominoes that would start to fall around the world, with the banking sectors everywhere being under incredible amount of pressure. But look, overnight, the European markets really stabilised following, they had a day to digest this deal between UBS and Credit Suisse, and it looked pretty good on the market's perspective. It's just one day of trading, so let's not say everything's over just yet. But we can just quickly show you with a little graphic what happened to stocks last night. You can see Dow Jones in America, that was up 1.2%. FTSE 100, that's Great Britain, London's stock exchange, up almost 1%. And then the Euro Stoxx 50, which is a selection of the top 50 biggest in Europe, that was up as well. So good news there on the market's perspective. But there is one bank that continues to struggle, and that's First Republic. The shares in First Republic fell 47% last night. This is, of course, the bank in the Silicon Valley, not Silicon Valley Bank, but another one which lends to high net worth individuals, including reportedly they had Mark Zuckerberg as a client with a home loan back in 2012. So remember, there was a bank bailout announced for them last week worth $30 billion US. Now there's talk that these big banks need to put more money into First Republic to keep it going. So that's kept falling. Let's look at the ASX though. That's what we care about, the ASX. It's just started trading this morning. It's up about 1% in early trade. So we've had a couple of tough days for the stock market recently, including yesterday where it fell about 1.4%. So markets bouncing back a little bit in early trade. So that's good news for investors who would have seen the value of their shares fall quite substantially over the past week and a half. Yeah, good news indeed. Ed, thanks so much. Now, the consumer... let me actually ask you one more question because I was going to talk about consumer confidence. Let's talk about the figures. They've been released. Confidence has fallen to one of its lowest levels since March of 2020. Yeah, look, this is the regular weekly ANZ Roy Morgan Consumer Confidence Survey. It's fallen for the last 5 weeks in a row, and basically it's all due to rising interest rates. People are feeling less confident to spend money, which in a way is actually what the Reserve Bank wants. They want people to tighten up their spending to bring down inflationary pressures in our economy. We know inflation's slowly coming down, but it's not really coming down as quickly as many people, including the RBA, would like. So we've got the first chart we can show you, just putting the current consumer confidence levels in context. You can see it's really plunging at the back end of that chart. There was a bit of a fight back towards the end of last year, and really it started falling again. Go to the next page. This is part of the survey where it asks people time to buy a major household item, and you can see there that it has really been falling for the last 4 or 5 weeks, and it's almost at the lowest level since March 2020, which was the start of the big pandemic. So consumer confidence is not great at the moment, but in a way it's actually good news because it means people aren't spending as much money out in retail stores, and inflation in theory should be coming down. Yeah, so the RBA might like that in terms of not putting up rates. We will see. Hopefully.
Thanks so much.